morning, everyone. Thank you very much for being here. My name is Agadana Meri. I'm the General Manager of iCapital, which is iAngel subsidiary focused on blockchain investments. Thank you for Mixer for hosting us and being great friends and giving us this wonderful place. I'd like first to thank our panelists and to introduce them. So Daniel Peled, President and CEO and founder, of Orbs and Asaph, Neu-Ner, also known as Crypto Man Ran, host of the most popular CNBC show on Cryptotrader, and Asaph Schulman, CEO of Coinmama. So why don't we start with a personal introduction by each of you, and maybe you can tell a little bit about your business. Daniel.
Sure. So Daniel, as mentioned, I'm one of the founders of Hexa and Orbs. At Orbs, we are building blockchain for large consumer applications. I think it's one of the leaders in the L2 space to really be able to build a blockchain that solves issues for big applications and companies. And Hexa is the investment and consulting arm that is helping push the Orbs ecosystem and also investing in interesting things in the blockchain space.
And he runs a very impressive operation every time I was here today. I'm Crypto Man Ran, or Ran Neu-Ner. I host the world's only televised cryptocurrency investment show. I also run two funds. I run a fund and I run an arbitrage trading fund. I live on an aeroplane. I live on Emirates 3A, Emirates C3A. That's my permanent address. And I travel around the world meeting amazing crypto people.
Hi, my name is Asaph. I'm the CEO of Coinmama. We're a retail platform trying to simplify crypto for the masses and get the next billion people on board. I don't know if you recall your first crypto experience, but even very intelligent people are finding it difficult. We're trying to really dumb things down so every person out there can participate and get things need to change dramatically in order for the next billion people to come online. So
thank you. So that brings me actually to I think the question that is on all of our minds, and I think you all have access to kind of to a global view on what's going on in the market. So from the beginning of the year, we've seen a massive decline in the market, and I'm wondering what your thoughts are on this. Where do you see the next bull run coming? Is this what's going to happen with the market? Is it going to stay so low for a long time? How do you see this evolving?
I think at Coinmama we have sort of first access to what's going on in the market on a global scale. We serve 190 countries, we have 1.2 million users globally. We see exactly what's going on in every territory. I can tell you that whenever the regulation becomes more, clear in certain areas, then the sales and volumes of trade go up. That's what we're seeing anyway. When markets are volatile, people see that as an opportunity to join. We've obviously seen a massive decline in new entrants to the market, but the existing users are still very active and are still trading. That's at least what we're seeing.
Do you see more new money coming into the industry now,
so
or less?
There's a constant influx of new money and new investors. It's less than obviously the 6 months ago, but it's still significant. So we're seeing thousands of new users per month that are joining.
So Ran, you've been traveling the world for the past year or more, but I've been seeing you around for the past year in various places. How do you see this? How do you see the market performing?
So I think we're looking at the whole thing completely wrong. So we're looking at this from an investor point of view, and we're saying we were at 800 billion and we went down to 200 billion, and is it all coming to an end? And I think what we've seen, we should break it up into two things. We saw an investor speculation bubble which took the market from $13 billion to $800 billion and then back down to $200 billion. But what we haven't seen is anybody actually using crypto. So we've had the investor speculation bubble, Cool, let's get that out the way. That got a whole lot of people really excited about this new thing called the blockchain, because before the bubble, nobody knew what the blockchain was. And after the bubble, everybody knows about Bitcoin. The taxi driver on the way here gave me his story about Bitcoin, and we told him we're going to a Bitcoin event. Now, that wouldn't have happened if we didn't get that bubble. So those kind of investor speculation bubbles are extremely, extremely important. The second reason why they are important is because they created fake money. People made money on Bitcoin and ETH, which they bought at $5, $6, $7, $8, $9, $10. And Bitcoin, most people bought it around 1,000 at the beginning of last year. And that became 20,000. And on the way between 1,000 and 20,000, people invested that money into new ICOs. That money was then used to fuel developments and ecosystems. I'm sure that or if there are any founders here today, you should thank your lucky stars, because the only reason why you got funding was because of this bubble. Now that the investor speculation bubble is out the way, we need to get down to serious business. And we need to actually build applications that use crypto for reasons other than speculation. And I don't mean ideas. I mean, I want to see people actually using crypto. And when we do that, then I think the bear market will be over. From a speculation point of view, I think we've seen the worst. I don't know how much though.
Have we seen it? This is rock bottom.
I don't know how much we can go lower than 200 billion market capitalization. A 200 billion market capitalization is not even a real market. There are single companies in the US that have bigger market capitalization.
Isn't that a risk that it would all go away since it's that small?
If you think that it's all going to go away, then you shouldn't be in this room, because for me, blockchain is binary. It's either really going to work or it's going to zero. And I think we're all here because we believe in the technology and the implications that it's going to have. And if you believe that, then whether you buy in at 200 billion or 180 billion or maybe 160 billion, it doesn't matter, because it's going to trillions. So if you miss it by 20 billion, if you miss the bottom by 20 billion, it's not really the end of the world.
So what I guess that from what you're saying, the next wave will be when we're actually going to see blockchain implementation into our lives. I think a lot of people expected that or invested in ICOs that were supposed to do that last year or at the end of last year, beginning of this year. When is it actually going to happen?
Well, the question is, we are probably the earliest adopters, or amongst the earliest adopters in the world. When was the last time you used crypto to do anything but speculate?
Well, I paid with it once.
That's not a use case.
I agree. So when are we going to see actual? Maybe that's a question actually for Daniel to try and answer.
Sure. So actually, I think a few interesting things we'll mention here. I totally agree. We need to look at things at their perspective. A year ago, I had a bet with a friend that if Bitcoin reaches $4,000, I'm not going to go to work anymore. Obviously, we are working we're super passionate about this space. But even going back to 7,000 in perspective, I think the market is in the right direction. And also, there was definitely a bubble on the retail side, and that has died down. You see that with the entrance of new users, with Coinbase and other companies that are helping mainstream come in. But I'm very positive because, at the end of the day, like was said, when these bubbles occur, the ecosystem as a whole gets stronger. Even today, Ether is the price was a year ago, 280, it reached 1,400, now it's back to 280. But the ecosystem is much stronger, the amount of projects, the amount of developers. So I agree definitely that this needs to be delivered real fundamentals value and real utilities to a lot of these projects. But the ecosystem as a whole is much stronger. And regarding the technology itself, I think, again, everybody in the room understands the potential. Blockchain, to me, brought two things to the world. One is digital scarcity. It's the first time that we have a digital asset that is scarce, and that's huge. It's a new asset class. I've been telling people for a couple of years already that if you have a saving account and to hold it in fiat money, in US dollar and shekel, 100% doesn't make sense because fiat currency is inflationary, you're losing buying power. So what do people do? They diversify. They put some in real estate and some in the stock market and some maybe in gold. So having 1, 2, 3% of your saving portfolio in this new asset class, which is the best performing asset class in the last 8 years, Bitcoin, the best performing asset class in the last 4 years, Ethereum is completely rational. So I think the market it will take time. It will grow to 2% of the global assets, which is around $2 trillion. It will take time, but I do see over the next years it can grow about 10x from what we are today. It's totally rational to diversify 1, 2, 3% of the portfolio. And the second thing that is amazing innovation is that it's the first time that we're able to do global mass-scale collaboration that is completely trustless. If you look at the companies that are in the world today, there is for-profit companies making revenue, IP, giving dividends, Google, Facebook, Amazon, and then there are amazing companies doing amazing projects such as Wikipedia, such as Mozilla, such as Linux Foundation, but nobody knows how to monetize them. And now we have a third class of companies that are open source community-based, which is super powerful. Ethereum has more GitHub repositories than PayPal, for example, and everybody can connect to it, but also everybody enjoys the wealth creation. So Ethereum is a non-profit foundation. In 2014, the token started at 30 cents. At the peak, it was 1,400. That's 4,000x growth. And who enjoyed it? Everybody that was part of the ecosystem, the investors, the users, the service providers, the external service providers. Having an ecosystem of 50,000 people that are working together, completely trustless, is a new model that I truly believe in. So I'm very bullish on the ecosystem. I think it will take time. I think the next cycle won't come from the retail. The retail joined the last cycle, and some of them did get hurt. I think it will happen when institutional money flows in, which is ETF. We need custodians. We need Wall Street, but this will take time. They need clarity, regulation, and obviously security solutions. But as a whole, when I see the people that are joining, I'm super passionate that this is really what gives me the confidence on the research side, on the tech side, on the developer side, the smart people that are joining and growing every year. This is what I look at.
Thank you. And so you mentioned institutional money coming into to the market, and specifically through ETFs. So in the last month, about 8 ETF requests were refused by the SEC. What's your view on this? Maybe Ran can share. Why do you think they were refused? When are we actually going to see an ETF approved?
So, ironically, I spoke to the SEC last night for 2 hours. For 2 hours,
I knew I should ask you.
Yeah, for 2 hours, I tried to get information out of them about the ETF. And the only way that I could get information was to look at the expression on her face when I asked the questions, because they weren't letting me have any of the answers. What she did say was, she said that the 9 ETFs that were declined, there's no time frame for them to say yes or no. But she also said, to paraphrase and not really quote, she said something like, I don't think we can keep denying the Bitcoin ETF for much longer. Which means that people are starting to come around. Though I must say again, I don't think that a Bitcoin ETF is the be-all and end. Everyone's like saying, when we get an ETF, the market's going to turn and that's it. We just need the ETF. I think that the ETF may be a bit of a disappointment. I think the ETF may be approved, and then it's still going to take a long time for investors, institutional investors, to actually put their money in the ETF. There's going to be a long sales cycle around that. I don't think it's going to be like a 24-hour thing, and all of the institutions are going to press this button, and the market's miraculously going to go up. Also, try and remember that the ETF is very much centered around Bitcoin. And when you talk about Bitcoin, Bitcoin is the ultimate in cryptocurrencies because it's completely decentralized and immutable. That won't do anything for Ethereum, which is anything in my mind but decentralized. You know, it's got Vitalik in the middle and the Ethereum Foundation, which really drives everything. So yeah, I think the ETF is important. I think more important is, I'm going back to what I said to you earlier, more important is we need to create blockchain applications that really work and that don't have the word blockchain in them, that don't have the word cryptocurrency in them, and that people use automatically. I think for me, probably the closest example to this is the Brave browser. I don't know if you've used the Brave browser, but you don't know that you're using cryptocurrency, you don't know that you're getting cryptocurrency, you have a perfectly normal surfing experience, and somehow you earn money in a wallet, and if you're smart enough, you can actually spend it. That's what we need to be building. And then the institutions will start to trust us. One more point on institutions. This thing called the utility token that we all invest in and we're also bullish on. I always play out the scene in the boardroom where the pension fund guy stands up in front of the board and he said, look, I invested in this asset class where we have no rights. The company has no obligations to deliver anything, and the owners are on a yacht, and I've gone to the police and the police say that the contract that I signed actually said that the owner is allowed to take the money and be on a yacht. I mean, I just can't see the day that an institutional investor will have the guts to invest in a utility token in its current guise. We have tokens, we invest money into hundreds of millions of dollars into projects where there are no milestones, there are no obligations for the team to deliver. In fact, let me be pretty open in this room. I consult to a project, I consult to many projects, but I advised a project a year and a half ago. And I helped them raise $35 million. I don't want to mention the project because this may actually go on TV. But I spoke to the founder of the project. I speak to him once a week. I said, "How are you doing this week?" He's like, "Oh, you won't believe it. I took a job at an exchange as a CEO." I was, dude, we raised $35 million from my friends, from investors. He's, "Yeah, but this was like a great job." And that's the problem with ICOs. They have no obligation to deliver anything to you. Like, well, what's going to happen to the 35 million? Oh, well, it's actually not 35 anymore, it's 10 because the Ethereum price went down, and we spent like 8 of it because, we took a yacht. Now, can you see the day that the institutional investor, the guy that runs the pension fund money of the US government, standing in front of his board and explaining to the board why he bought into this useless instrument? And so I think that if we want the institutional investors into this ecosystem as we currently see it, then the truth is that either we are going to gravely change the way we do business in utility tokens, or the legislators will come in and do it for us. And when that's done, then the institutional investors will come in.
Interesting.
Yep.
Yeah, sure.
I'm just following. So I think three super interesting topics Ram talked about. One is adoption. I think on the adoption side, what happened over the last 8 years with Bitcoin and Ethereum in the 4 years is that the layer 1 has been created, which is the liquidity layer and the trust layer. Today, I do see Ethereum and Bitcoin is very decentralized, it's very secure, they're holding huge amount of money together, about $150 billion. But I don't
really think that Ethereum is decentralized.
There is a huge bucket of money that if somebody can attack it and take the money, they have the incentive, and it hasn't happened yet.
Let me help you a little bit.
Yes.
There was a meeting that was held last week where the miners weren't even at the meeting, and they voted that they should reduce the block reward from 3 Ethereum to 2 Ethereum, and the vote went through. Now tell me that could happen on Bitcoin.
So first of all, the vote coming through doesn't mean that it'll be adopted. Still, the political ownership is in the hand of the miners. And that actually brings me to the second point, which is I think we created the trust layer, the liquidity layer, but that is not going to be the production layer. Because we need to understand there's not going to be one blockchain that is the best at everything. It's a lot of matter of trade-offs. If you want to be more decentralized, more secure, 18,000 nodes or even more like Ethereum and Bitcoin, it's going to come at the cost of speed, transaction throughput. If you want to have the political ownership on proof of work or delegated proof of stake, that's not aligned with the interest of dApps. So what is happening, and I think 2019 is really going to be the year, is that there's a couple of companies that are building the L2. They're really production grade. We see Ripple and EOS and Stellar. Orbs is one of these companies that we need to solve the issues that the layer 1 can't solve because it's a matter of trade-offs between speed and decentralization, between anonymity, between compliance. So what these layer 2 blockchains are trying to solve is transaction throughput, fee model that can scale, update model, governance models, privacy. These are the things that production-grade companies need. And then there's going to be a connection between the L2 blockchains and the L1 via Plasma, Atomic Swap, and other protocols that developers are working on. So I think definitely 2019 is going to be the year that is going to drive to more utility, and it's going to be on the L2 blockchains. Secondly, I think utility tokens, security tokens, I definitely agree that I haven't seen many projects that actually have utility tokens. If you ask anybody, I bought, for example, Telegram. I think Telegram is one of the largest companies entering the space. All the ecosystem is built on it, 200 million users, amazing execution. But you ask me, why did I buy more than $10,000 worth of Telegram tokens? It's not to use whatever they're going to give me inside the messenger. Obviously, it's a value appreciation. So everything is going towards the security token space. I think utility is only within blockchain that it actually pays for the securities of the network, and the decision regarding Ethereum and Bitcoin, I think they were correct. So if you're moving to security tokens, I think that is super interesting. Essentially what is happening around security tokens is that every asset today can be tokenized and provided a global liquidity network. So For example, real estate, one of the largest non-liquid assets, if you tokenize them and you put them on a tokenized exchange, suddenly there's liquidity to many people that is completely global. And today, the only alternative for companies is, for example, to do IPO, to sell shares. When you have tokenization, especially for, essentially it puts every product, you're able to get it to many people and to have a liquidation, global liquidation around it. And I think that is super powerful. And the second thing is why companies are looking at this space, because we need to remember ERC20 and tokenization created a new standard of how we transfer value over the internet. Until today, every company is like a silo. There is a bank with loyalty points, there is an airline. It's just stupid points sitting on an AWS database which is worth nothing. And they need to work very hard to create value to these stupid loyalty points within a centralized server. But once you issue tokens, and tokens are global and programmable and can speak to one each other, it's much more value to the consumer, and suddenly all the companies speak with one each other. Obviously they can't do it on a centralized database because then they become a bank, MSP, LTP, and the rest of the things. So a lot of companies are looking to tokenize, are looking to add to program the economy better using tokens. It's a whole new model, but it will take time.
So you're actually working with those types of companies. You're working with large consumer application companies that are trying to migrate their business onto the blockchain. So that might be a good opportunity for you to tell a little bit about how you do this and what's their actually incentive to migrate to the blockchain, because they have been working quite well so far.
Sure. So we haven't woken up one day and said, let's do Orbs. It's actually an interesting story. We started as an investor in 2013, been investing in tokens for the last 5.5 years. That has been very successful. 2017 came and there was the whole boom in ICOs and token sale. And we are quite cynical. We think 99% of the tokens that raise funds don't have real fundamentals. They will crash. If I compare it to the dot-com between 97 and 2001, many IPOs raised money, 2001 came, 95% disappear. The same is going to happen here, and you see it in CoinMarketCap. The top 50 tokens are being replaced year over year, except the blockchains that are creating a network effect. So we said, let's invest in real companies, right? Companies that have track record, revenue, governance models, companies we believe in. So we created Hexagon, which is a consulting arm that helps real companies transition into the space. One of the companies, for example, we're working with is IronSource. IronSource is one of the largest ad tech companies in Israel, if not the largest. And they have a super interesting project named Zing. But when such a company transitions to the space, they do need help with security, with smart contracts, with token economics, with community relationship. This is what we help them. So the companies we helped do this process over the last year raised significant funds over Ethereum. But now when they're trying to transition the ecosystem on top of Ethereum, they really reach a wall, which is all the difficulties I mentioned before: transaction throughput, fee model, governance, updates, all of the things that they expect to get, and they're getting today from AWS, they're not getting from Ethereum or from Bitcoin, for example. So we started analyzing all the third generation blockchain. There's a lot of smart team, interesting team working on the L2 solutions, the Algorand with randomized committees, honey badgers with encrypted blocks, a lot of different things. And again, once you start realizing that it's not going to be one blockchain, it really depends what are the requirements. Repo isn't better than Ether, Ether is not better than Repo. Each one is completely different use case. The use case of financial institutions, they need different things. And so we were working with large consumer applications. And then while working with them, you start to really understand their requirements. And we thought that we can build an infrastructure that from day one is very requirement driven. And there's a lot of interesting things, an example I can give you that I don't think that just developers and researchers necessarily think about, because the first question is to ask what is the pain, what is the problem, what you're trying to solve. So for example, fee models. In consumer space, the fee is almost never on the end user like it is in Bitcoin and Ethereum today. Consumer applications are willing to subsidize the end user in order to create frictionless user experience. So on Orbs, they know the application can choose if to subsidize it or put it on the end user. This is one example. They need to have their own environment. Amazon has a shared instance that is very cheap, but it also has a dedicated virtual machine. So Orbs also has virtual blockchains. So each company application building on top of Orbs has much more flexibility. They still enjoy the consensus of the whole network, but they are much more in charge of their environment. So it's a lot of concepts that we're actually looking at AWS as the leader today that are working with applications that we're trying to apply at Orbs and bring to the blockchain space. But I think it's all driven by working very closely with the customer, and that's one of the advantages that we have, that we had some of the largest consumer companies in Israel with billions of users in their SDK, like iron source, they need a solution today.
Thank you. So we touched upon Ether in the Ethereum network a couple of times in the conversation. Ethereum is mainly, up until now, been used for raising funds through ICOs. It has problems of inflation and also of the fact that ICOs raise a lot of money and then they have to sell the Ether to actually pay salaries and rent and maintain their activities. So maybe Asaph, you see it kind of from the retail perspective. Where do we see Ether going? Is there future to Ethereum?
I personally think there is. So I know it's not as decentralized as Bitcoin, obviously, but there's obviously a spectrum, and there's compromises that need to be made. I think in comparison with other blockchains, Ethereum is fairly decentralized, and the rate of adoption is huge. You see all those, GitHub, you see this sort of inflow of developers into this ecosystem. You see so many development tools and frameworks being created, which all the other blockchains are still lacking. So it makes a lot of sense why we should continue to see the adoption of Ether go through the roof as far as I see it. We personally see a lot of interest in Ether. It's obviously the second largest on CMC, but it's also the second largest on Coinmama. And we see we still see a lot of people investing in projects globally, and using Coinmama to instantly get their Ether and be able to invest in projects.
Well, you're working in 180 territories. What is the most active territory in terms of buying Ether, investing into Ether and Bitcoin? That matter?
Well, the most active, the active ones for us, I don't know if it's the most active ones globally, the active ones for us are, US, Western Europe. We see a lot of activity in South Korea, as you can assume, Japan. So those are countries that are very active inherently. There's a lot of innovation in those spaces, but these guys are very smart. We see South Koreans manipulate sort of inefficiencies in the market, and there's so much demand and adoption within South Korea that if there's arbitrages in the local exchanges, they come to Coinmama, buy instantly, deposit into the exchange, and offload their assets. So there's very smart things happening. Each territory uses it differently, which is part of, I guess, the interesting thing about it. But yeah, we don't see Ether slowing down anytime soon.
Okay, so Ran, you travel the world and you see projects all over the world, and you meet investors, and you've been here for a few days right now, and interviewing a lot of projects and getting the feel of the Israeli ecosystem. How do you compare Israel to other places, and where do you see the next wave of who would be the startup nation of crypto, basically?
Yeah, I think it's a very interesting question. So, I came here I was born in Israel, and I wear an Israeli flag. And I came here really because the reason why I've been trying to come here for so long and to do a CNBC show is because we never hear of Israeli projects outside of Israel. When you compare them to the US projects,
except for Orbs.
Well, I think that Orbs has done the best marketing job of any Israeli project that I've seen. But still, Orbs is not. Orbs is a much bigger project than, for example, Terra, which is a stablecoin coming out of Korea. But today there's much more hype and excitement around this stablecoin project that raised $30 million than there is worldwide around Orbs. And if you go to Korea or Japan or the USA and you ask people, have you heard about Orbs or have you heard about Terra? I think most people will say they've heard about Terra before they've heard about Orbs. Whereas Orbs, in my mind, is a much more exciting and a much more relevant project than, a stablecoin, which personally I don't even think we need stablecoins. If we just keep buying Bitcoin will eventually be stable. So I think that, to be honest, I'm a little bit disappointed in Israel. I think that we have the smartest people in the world here. I think that the blockchain is, if you ask me about a technology or a market that Israel should have been the winner at, or should be the winner at, for me it should be the blockchain. It's a combination of computer science, maths, engineering, all of which Israel must have the best advantage in the world. Having been here, I think that even though we have amazing projects, Orbs, Stack, etc., 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 these are projects which I think Israel has a massive marketing problem. I think Israel doesn't know how to create enough hype in this game. I think that Israeli projects don't do very well in exchanges. So, having said that, maybe they've missed the first round of speculation, but maybe the Israeli projects will be the ones that actually deliver the product that people use, and fundamentally, that will be used. But as I stand here today, to be honest, I was expecting a lot more from the Israeli projects. I hope you don't shoot me down for that. I think Banco is a great example. Banco is a ICO which, at the time, if it wasn't the biggest, it was close to the biggest ICO in the world. 5 times bigger than any normal ICO. I mean, I don't know if they raised $130 or $150 million, but that's 5 times the normal ICO raise. You go and ask the crypto man in the street, what does Banco do exactly? I bet you that in this room, no one can tell you what Banco does.
Solving the double amazing project.
No, I mean, how many of you in this room, hand on heart, really understand what Banco does?
Here.
5 people.
No, 6.
10. This is a project in your back garden which raised more money, one of the highest utility token raises in the world to date. 10 people in the room in Israel know what Banco does, and I think the token valuation kind of alludes to exactly what I'm saying here. Again, I'm not saying I think the Israeli projects are fantastic. I think the engineers are fantastic. I think the people that I've met here and the problems that they're solving and the way that they're solving the problems is unparalleled, much better than Korea, Japan, and all the other environments. But in terms of hype, excitement, awareness around the world, I think Israel is slightly lacking. I think Israel will win when it comes to consumer adoption and actual usage. And specifically after the couple of days that I spent here, each one of the projects has a pragmatic and logical approach to implementation. Here's a great case in point. You sit here and you hear about people bringing big companies onto chain, developing a layer 2 solution that companies can actually use pragmatically. So maybe Israel's not good at hype, but Israel may win the actual implementation.
You can also name Aeon, one of the founders of this very. Yeah.
Look, I also think that one crutch that Israel does have is that the legislation here is a bit of a grey area. So I think there are a few people working in Israel. Most of the foundations are registered in Malta and Gibraltar and stuff like that. So I think maybe the legislators should be a bit quicker and a bit more favorable.
I want to actually ask you a question. It's true that Israel hasn't been, the winner in creating hype and global awareness, and there are projects in Korea and Japan and others that have done a better job at that. Yet Orbs has miraculously in this market managed to raise $118 million, which is incredible given market conditions, and most of which is actually obviously not from Israel, so from Korea and Japan and those places. So I'm curious, what's your magic? How did you actually manage to do that?
So just before jumping to Orbs, I do want to respond to Ron, because I do think a lot of what he said is correct. We haven't been the best at marketing, and the market of 2018 was most about hype and not real fundamentals. And the US is currently, there's a lot of uncertainty. Usually the Israel companies are very good in the US. In Asia, it's harder because of the language barrier, the cultural barrier. So obviously the companies there have an advantage. But I definitely agree with the second thing that was said, that I don't think there is clear winners yet in any of the spaces. If I look at the real assets that I would like to have in this ecosystem. So I think the 3 main things today that we look at Hexalabs that we believe in is one, infrastructure, blockchain, distributed consensus. That's the killer feature in this ecosystem. And if you look at the infrastructure today regarding the transaction and utility and drive that they're doing, it's very, very small. EOS has about 3 apps that is doing 300 daily users or something like that. The whole aspect of actual adoption, it's just at the beginning. So I think there's no clear winners there. And then if you look at the exchanges space, which is obviously super interested, if something told me about this space is that everybody wants to speculate, everybody wants to be a part of tradability, liquidity of this open market. So again, there are exchanges that are leaders, but I don't necessarily think they will keep being the leaders because they have a Pandora box behind them with a lot of stuff that are not super compliant. And the companies that we're investing that are going into this space right now were the best companies in the Forex space, in the options space. They have the customer acquisitions, they have the KYC, they have their compliance, they know customer acquisition. So I think some of the exchanges that are building in Israel will become leaders in this space. And then I look at security. Again, this is just very, very immature regarding the hard wallet, the custodian solution. There's amazing security companies working on solutions to really drive this to mainstream. So I agree we haven't been the strongest on the marketing, but driving real fundamentals and creating some huge companies, I think, honestly, the next checkpoint will come from the blockchain space, and because there's no clear winners such as the mobile and ad tech space, this is the space I'm the most passionate and interested about. Regarding Orbs, we did do a big raise, and everything was from accredited investors, strategic investors. I think what helped us is that we've been in the space for over 5 years. We've been investing with strategic people. We haven't jumped in the last few months and tried to ride the wave. And that gives us a lot of credibility and a lot of trust that has been built within our network. So some of the strategic investors that invested, for example, in Margo, some of the strongest group in Japan. Kakao did very long due diligence on Orbs on the technology side. They are the largest company entering the space in Korea. So I think fundamentals, we show that the technology is super interesting, but also the relationship and network that we had in the space helped us a lot.
Thank you. So let's maybe do a quick run of a few questions. I know Ran and Daniel, you're both also investors. Asaph, you personally invest too. So what has been your favorite project in 2018? Doing what you're doing. Learn from the best.
Yeah, talks well now.
I can jump. I'm a bit biased because this is some of our portfolio companies, but I'll give a few examples of spaces I'm super interested in.
One.
Okay, one.
One
so
favorite.
I talk actually about the gaming gambling space. So there is a company that is named Betvolution, and they're totally trying to disrupt the gaming gambling space using blockchain technology. So until today, all the companies like Betcash and Funfair, what they try to do is to bring all the actual betting onto a blockchain, which created a very bad user experience because it's much slower to prove that everything is fair. But if you actually work in a completely regulated environment, then this is actually not the real issue. So what they're doing is a platform that is fully regulated. They already have licenses in Gibraltar, Malta. They are working to acquire a license in the UK, which is the largest market for gaming and gambling. And they have a thesis. There's two kind of gamblers. Ones that are looking at the best payout. If I have a game and I get 3x and I have another book and I give 3.1, I will go to the 3.1. So they will have the best payout. They have a roulette without the greens, without the zero, without the 0-0. So any rational player will go to their casino because it's the best payout. And then there's different players that they care less about the payout, but they want the best experience, the best gamification. So this is a bit under the radar, I'm not sure if I'm able to say it, but one of the largest companies in the space registered in London is actually going to provide the games and the compliance and the experience. So once they have the platform with the best games, with the best payout, and I think actually here there's real utility in the games themselves, gaming and gamblers is something that's not going to die. I think it has a social influence, but people will drive into it. But this I even see a little bit like a social aspect to it, because there's no house. There's 50% payout between the platform and the gamer. Some will lose, some will win, but the house doesn't have an advantage. So I think they will be one of the fastest growing companies in the space because there's a real usage for the token. It's completely regulated, compliant. They'll be able to market. They come from this space, and they have the best payout and the best game. Super looking forward to utilizing that platform.
Okay, so I'm going to answer that question twofold. One is, for me, the most exciting investment that I've made in the space, ironically, is Bitcoin. And the reason why I say that is I think it's the only experiment which has really shown that it's worked. It's completely immutable, it's undestroyable, it's been through multiple different attacks, and it's still here and it's still going well. The second one is also in the sports betting industry. It's a company that I'm working with. It's in stealth mode. A company called Spartas. What they do is they are taking sports betting, and they are backed by a company that does the software licensing to all the sports betting companies, and they're going to simply move that onto the blockchain. So you're going to be able to earn tokens and spend tokens on the platform. So for me, that is one of the most exciting projects that I've seen.
So I'm with Ron on the Bitcoin as well, but an exciting project that I'm involved in is called Loom. They're sort of Loom, yeah. They're a gaming platform. Doing a very strong team, creating a platform basically for game developers to create their own games, and solving a lot of the issues, of games being deprecated, and the ability for you as this avid gamer that your game has for some reason stopped, to take that and fork that and do whatever you want with that, and you move assets between games. I think this has huge potential, and it's just the beginning.
Well,
Can I add another company?
honestly, no, I want to say something about this. I'm a little bit disappointed by your answers. I mean, we've been talking about how Bitcoin is going to change our lives and the big revolution, and all the great things that can happen to us if there is actually mass adoption, and we're all talking about gambling. Like, is this it? Games, gambling.
First of all, again, I think having a 50-50 with the house, that's a disruption for the whole gambling space. It's much better than today that the house is actually making money from your losses. So I think there is a good use case here that will actually help people, because they're not going to stop gaming and gambling. Another project that I'm super interested about, and again I talked about it before, we believe in three things. One is infrastructure, blockchain, that's the distributed consensus. Secondly, in exchanges. And thirdly, is security. There's one company in Israel that is trying to tackle all these things. It's very, very challenging, but I think they're doing a great work. This is a Coty. If you dive into the project, if you look at the technology, if you look at the infrastructure, they have amazing engineers. They're already proven today to drive transaction throughput. Some of the scientists in IOTA is actually referring to the code and the blockchain that Coty is building. And they're trying to disrupt a huge space, which is the payment space, e-commerce. If you think about today, the usage of e-commerce is rather small for a couple of reasons. One is stability. They're working on that. Merchants can't really accept cryptocurrency if they're taking the risk of the fluctuations. Secondly, is really the connecting layer, the SDK, and how they can really onboard the payment method very easily. And thirdly, is that today everything is a push transaction. So when I want to buy something, I need to go to my wallet, sign the private key, send the money. But the e-commerce space works the complete opposite way. It's all pull payment. We just put the credit card and they take a recharge once a month and so on. So I think Coty is one of the most interesting companies because it's an infrastructure. They're solving a lot of the issues of scalability. And they're trying to disrupt the payment space, Visa and MasterCard, which we know the fees, and they're doing it in a super aggressive way. They already have merchants on board, users on board, they raise a significant amount, and I'm super bullish about their success.
And we are releasing our AlphaNet next week.
Brent, do you want to add a project, or are you?
Look, now that I've heard him mention Coty, full disclosure, I am an advisor to the team. But I really do back them. I think what they're doing, the way that they're doing it, they're very pragmatic about their approach. I think the team led by Shachaf, he's an amazing, amazing, amazing guy. The more time I spend with him, the more time I want to spend with him. And I think what they're doing is fantastic. So yeah, I think I'll put a big tick next to that one.
Okay, so as investors, what do you, and you mentioned it a little bit when you spoke about Coty and the other projects, what are you looking for in an investment? Like, what are the 5 things that are most important?
So it's a good question, because I think if you would have spoken to me in January, February, I would have said to you, I'm looking for the project that has the most hype. I'd look at the Ian Galina spreadsheet, and I'd take the project on the top, and I'd work my way down. And I think thank God that the markets come down to some kind of rationality and some kind of equilibrium. Today, so obviously I look at, does the project really need the blockchain? Because I think 90% of the projects that I see today are using the buzzword of blockchain to raise money, because it's an easy way to raise money, and their project doesn't really need the blockchain. If I know that the project needs the blockchain, then the question is the industry that you're in really going to be disrupted by the blockchain in a very short period of time? So I don't want to be involved in industries that are going to be disrupted by blockchain 5 or 6 years from now. Sports betting, gambling can be disrupted tomorrow morning. If we can get the scale in the online in the blockchains themselves, then I'll do that. The third thing is I've become quite pragmatic about if you're going to be on blockchain, then you've got to be building a decentralized, open source platform. There are too many of these companies that have raised money in the blockchain but still keep an equity component. I have now become really pragmatic where I've said, if there is any value in the equity of your company, I'm not going to invest in your token. And the reason why I say that is because when things go bad, the CEO jumped in, the guy took the CEO job at the exchange. And for me, I need to make sure that the protocol is going to live way beyond the people and the money that's in the business. And I think Naval Ravikant said it very well. He said, when the difference between companies and protocols is that when the money runs out, companies die. But with protocols, when the money runs out, it depends on how good a job that they've done in building these protocols. So for me, now specifically, I drank the Kool-Aid and I got caught up in the hype of the beginning of the end of 2017 and the beginning of 2018, and I broke all the rules. But now I'm really, really pragmatic about there can be no value in equity. These things must be open source, decentralized projects where the community stands to gain, and if the founders die and if the money runs out, the protocol and the projects are still going to live. And then the last thing that I look at, which is probably the most important, is can the team get the protocol running at point A? So again, we spent time at their office yesterday. Now that I understand Orbs a lot better and Hexa, I see the team behind it. This is a team I'd invest in. Because I know that they can build a great runway, and then the protocol let the protocol run for itself.
You don't need it.
So first of all, before I answer what we look at, we need to understand that the investment space is super hard. If you look at the venture capital, for example, people that have been doing it for years, the success ratios are very, very small. I think Angel can speak about this space much better than me. I'm not an equity investor. But I did read the Kaufman Foundation report. It's a fund of funds investing in the best funds in the world in the last 25 years. And they analyzed what happened. Why are they not making money? So all the promises of 3.14x over 10 years or the 10% IRR, 95% of the funds don't deliver that. Most companies fail. About 1% in the venture capital space backed by real VCs succeed. So this space is very hard. In the crypto space, much less than 1% are going to succeed. I can promise you that, because they're raising too much money, it's easier money, there's no governance, you don't need to show the track record, and the technology is very mature from a technology perspective, from a user experience perspective. But still, if you ask me if I want to invest in tokens, security tokens, utility tokens, or in equity, I always would prefer this side, and this has been successful for us because tokens have one thing that equity doesn't have, and that reduces the risk factor, which is the secondary market. I can liquidate my positions and not wait 7 to 10 years in an IPO and M&A that most companies fail to reach. So what do we look at? It's actually is very similar to the venture capital space. We look at three things. Obviously, it starts with a team and people that are passionate about what they're doing, strong team, ethical people. This space and money can really change people as they go, so that's the most important thing. Then we look at tech. It has to have a very strong technological side, and we look if they understand the business side. Always when you have two, it doesn't really work. If you have unethical teams with strong tech, strong business doesn't work, strong tech, ethical, no business doesn't work. So you need to look at these three. But again, if you ask me actually, and Ron mentioned it a little bit, there is the fourth factor that is super critical here, and I think most people in the room actually miss it, is that I want to get the best price. I'm a very rational person. If I get the token at the best price and I'm rational, I'm not going to sell at a loss. If somebody has a better price than me and he can already make a profit when I can't, most likely he will do that because he's rational. So getting to the first line, getting the best terms, and this is what the big venture capitals in the crypto space do. It's a huge, huge advantage. When it reaches the other buyers or the exchanges, they are already in the profit. So it's much easier for them. And I think, I'm not sure everybody understands the demographic of how the terms work. That's one thing. And then the second thing is really understanding the secondary market. There's amazing companies in this space that are building tokens and doing amazing stuff, but they don't understand how the secondary market works. And that's super critical because the power of the company is the value of the tokens, the trust, the ecosystem. So if I look at Orbs, for example, it's not just enough that we have some of the smartest people in the tech and research side from the A200, from the best universities. In the end, all the thousands of hours of development, everything is on GitHub, everything is open source. The barriers to entry are very small. You press a button, you get everything that we developed over the last year, and we can do the same for Ethereum, for Tezos, EOS, Cardano, and so on. So what gives value to tokens? I really compare it to fiat currencies. What's the value of the dollar? What's the value of the shekel? It's the strength of the ecosystem that use it. The US is very strong with the businesses it has, Google, Facebook, and the rest. Venezuela businesses are falling apart, and the currency is inflationary in hundreds of millions of percents, and nobody trusts it anymore. So what is growing the ecosystem? We took the approach that worked for Ethereum. If you go back, Ethereum in 2016, they raised, in 2014, they raised $18 million. They didn't hedge the fund. They crushed 50%. They had $9 million. There's a lot of misuse of funds, non-profit foundation, CEO, 18 years old. They almost went bankrupt in the middle of 2016. There's a very famous blog post by Vitalik. They had about 6 months of runway. Then one of the founders, Joe Lubin, went and opened Consensus. And from then, it's really history. Today, Consensus is the biggest driver for the Ethereum ecosystem. 1,000 community developers and full-time employees, 28 countries, doing investment, incubation, marketing, community building. And this is driving the Ethereum ecosystem. So we have the same approach. Ethereum has Consensus. So what is going to drive Orbs is Hexa. And what do we look like? We started analyzing the market. What are the real estates that we need to drive projects to us, to drive the ecosystem to us? So one is exchanges. Every token, Orbs and on top of Orbs, wants to be tradable. We invested in 5 exchanges going live. One is DX, technology with NASDAQ, regulated in EU. One is a decentralized exchange, Atomic. One is in the real estate, banks. One is a white label security, iConnect. Super interesting exchanges. Then we started investing in market makers, because even if you have tradability and you're not liquid, it's not interesting. Algo is a super interesting company. Solidus is super interesting. Then we started investing in OTC, because even if you're tradable and liquid, project need constant funding. We don't want to sell it in their own market. We invested in First Group, we invested in Aleph-Bet. Then we started investing in media, because it doesn't matter what you do if you can't communicate it. Outbox, and we're looking at a couple of companies also. So when we come to a company and we tell them we have Orbs, they don't care. Because at the end of the day, they don't understand the difficulties in the space, they don't understand the differences between Orbs and the other companies. Most of them don't know what they're going to do in day one. But if we come with a consulting arm, we help transition them, we build trust, we understand the requirements much better. And if we can tell them we're building an infrastructure for your requirements, we can help you with the tradability, liquidity, OTC, media, we start growing a whole ecosystem to drive Orbs. And it's not just about the tech, it's really about creating the ecosystem. I think these companies need to understand that, because if the token is performing, that's your assets. You know, this is what we're driving. Ethereum raised $80 million, but the foundation has more than $1 billion of tokens, and this is driving the ecosystem.
Yeah, so I'm not a professional investor like these guys, but I guess from my point of view, things that are, it's just like you said it, Ethereum was able to get to where it's at today with very little money. So the fact that projects are raising substantial amounts of money just does not make sense. The ICOs make a lot of sense. I think it's definitely the way of the future. And the ability to have milestones and for projects to raise seed funding that is minimal, and do the process just like it is with equity, but with tokens, makes a lot of sense as far as I'm concerned. And I think this is also going to drive this whole ecosystem. Reach a milestone, get your next round, through the community, community-backed projects, makes a lot of sense.
Yeah, and well, I have to ask you then, Daniel, because we talked about enormous valuations and that we have to be sensitive to what happens to the token after the TG, the token generation event, and all the entire economics around this. And you've obviously raised $120 million. Why so much, and what's the justification? How, from an investor perspective, and you're also an investor sensitive to valuations, how do you justify that?
Yeah, so again, it's a little bit what I discussed. I had a startup, I raised less, we grew it over the years, and it was very successful. I know how to build tech. But doing a successful infrastructure, it's not just about the research, about the developers. It's really growing around the whole ecosystem around it. I really compare it to, let's say, a small country, to fiat currency. And to do that does require a lot of funds. And Ethereum is a good example. I don't think necessarily projects are raising the right amounts they need, especially if they're not in the infrastructure space. But also we need to understand the market change and involves in Ethereum. Today, to get listed, to have liquidity for your tokens, the top exchanges that used to just list you automatically charge $1 million and above. To do conferences, to do marketing, to compete with some of these infrastructures that they raise less, but today are holding billions of dollars in tokens. You saw Tron buying U-Turn. If you want to compete with them and be taken seriously by some of the largest consumer applications in the world and enterprises, you need to have significant financial stability. So when we went to choose the number, we wanted to choose a number that gives us the right awareness, that gives us the financial stability, that gives us the ability to grow an ecosystem in very good tech, but also, if it's Teslas that raise 230, if it's EOS that raise more than 4 billion, if it's Filecoin that raise 250, we didn't want to be at the top 10 because obviously they're the ones that will get the most scrutiny. So these are the balance that we were looking at to achieve what we're trying to do, to have the financial stability, to be able to build an ecosystem in good tech, but to be able to confidently say we haven't taken as much as we could.
I must say, I want to add one more point to his point, to defend your raise. I think the space is much more competitive now. I think when Ethereum raised their $18 million or whatever they raised, the space was quite small. Today, if you want to compete, you're competing against Hashgraph, you're competing against Ethereum, you're competing against EOS, you're competing against Cardano, you're competing against... So you actually need serious budget in order to compete these guys. Like you say, conferences, just getting developers to start building on your ecosystem costs a lot of money. So I think that it's not fair to compare an Ethereum $18 million raise to an Orbs $100+ million raise. I think times have changed, and at a protocol level, if you want to compete, you need to have serious money.
So this actually gets us to the next question. We see projects that are even infrastructure projects that are kind of struggling, raising $20 million or $15 million raise versus other projects like Hashgraph that are raising hundreds of millions of dollars at a $4 billion valuation. And obviously, we look at as investors, we look at both, and some of them make sense to us, and some don't. So how do you decide what makes sense?
Look, I know Hashgraph didn't make sense. I think that, like I said, I think we've gone through a curve that did this, and it was much easier when Ethereum launched, and I think it was even easier when Hashgraph started to raise. I think that if Hashgraph came to the market today, I don't know if they'd raise much, because I think a lot of what they raised was on hype. Mm-hmm. And I think now that, I always say, I think we protocoled out. Like, we've seen so many protocols, I can't even count them anymore. I'm invested in so many protocols, and I'm still waiting for my tokens on most of the protocols. I think it's a case of we've got enough protocols now.
So the next wave is dApps?
I think yes, but let's first wait for these protocols to come into themselves. We shouldn't rush. I'm very skeptical of investing in dApps today. I'm not as skeptical as a guy like Jimmy Song, who says that in 5 years we won't have any functional dApps. But I am very skeptical of investing in dApps. I think they're putting the cart before the horse. It's like investing in Amazon payment systems before we've actually got a working browser and a working internet. I think we can start thinking about it, but we shouldn't rush into it.
Okay, thank you. So before we open it back to the crowd for Q&A, very quickly, where is Ethereum and Bitcoin in a year?
So I'm not going to answer that. I'll tell you why I'm not going to answer that. I have gone full circle making price predictions. I used to be the guy who used to do the most price predictions. I haven't seen an accurate price prediction yet. Anyone who tells you they can predict the price is either very, 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 very lucky when the price comes right, or going to lose complete credibility. Also, this industry has been too much about when Moon, when Lambo, and when's Bitcoin going to hit 25,000. And no one's asking the right questions. When 100,000 users, when 10,000 active daily users. I think we should. I'm happy to have a discussion with you around when 10,000 active daily users.
When?
3 years. Yeah.
So I'm with Ron in terms of not trying to predict prices, but I think the market right now is undervalued in terms of there's so much innovation going on. There's so much such improvement in terms of fundamentals. Regulation starts to it looks bright. It's not there yet. The jury's still out in most places, but you see a real interest from the regulators to figure it out and to do the right thing. They realize there's an opportunity and that the genie is out of the bottle and it's not going back there. So the adoption in terms of developers flowing into this space, there's so many things that are sort of still in the oven. So you can't really expect to see massive adoption right now, but you see that people are busy building really great things that are going to disrupt every area of our lives. So for this entire ecosystem to be priced at $250 billion, which is 1/5 of Apple, is just mind-blowing to me. I think it's a huge opportunity. When it's going to really reach the destiny we're all hoping for, no one knows. I think it's a few years.
So obviously I don't want to say too much prediction. They say prophecy was given to fools. And definitely don't take anything I say as an advice. We do have a quantitative team because we're managing many assets that they put their responsibility on them, and whatever they say they do, and they have complete governance. I think we haven't reached the bottom yet in the short term. I think people are not throwing the napkins and there's no blood in the street yet. So I do think the price will still go down lower, and there is still time for consolidation, and it will take time for the reversal, and then we will go sideways for some time. So I think I definitely believe in everything that is being said, that the opportunity is so big, the market cap and the whole ecosystem will continue growing. I think that it will take time. I think that ETF, institutional money, smart money, custodian solutions, there's a lot of money that wants to flow in, because in the end the thesis that this is a new asset class, the best performing asset class, and you need to diversify 1-2% of your portfolio into it. The big players understand it. I think everybody understands it, but it will take time.
Well, thank you very much. Let's have questions.
We have started to see some decorrelation between Bitcoin and Ethereum lastly. I'm wondering, all this market of crypto, is very much, all the altcoins are mostly correlated to Bitcoin. Do you see any time where some alts, also some coins, will start to be decorrelated from Bitcoin?
Yeah, so I think definitely the market is not efficient today. There is mostly correlation with the movement of Bitcoin to the movement of the whole market, and every token is actually pegged to the Bitcoin because it's traded via the Bitcoin, and Bitcoin is mostly the volume against the USD. So when tokens will start breaking to directly trade with fiat, this will become more efficient. What I think we're seeing with Bitcoin and Ethereum is quite interesting. Again, I believe in diversification. I very much believe in some of the top 10 tokens. Each one is on a different vertical. But to me, still the clear winner is Bitcoin. Bitcoin does something very simple, very well, in a very secure manner. And when you start adding complexities, then it hurts that core value of a store value in a very decentralized system. There is other benefits. And on the Ethereum front, obviously they are the leaders. They have the biggest developers network, the biggest network effect. But there are other very smart teams that are working to solve these issues. So there's going to be a real competition. I think that today with Bitcoin as a store of value, the decentralized layer, the most secure layer, that big money will flow into, I think there is no clear competition there. So I do understand why Ethereum and Bitcoin might stop correlating at a certain time.
I think they have already. I think if you look at the chart.
Maybe for you, Asaph, what do you think about what we see these days? Every day, 1, 2, or 3 new exchanges are coming up.
So I think you hit the nail on its head. There's how many exchanges right now? Hundreds.
Yeah.
There's hundreds of exchanges, and there's new ones coming, popping up every day. I think unless you have some really smart either marketing tactic or some real differentiator, it's it's a red bloody ocean and it's suicide. So I think people have looked at the history and based on that are trying to judge what they're going to do next. We at Coinmama we're actually running the exact opposite direction and trying to create this simple experience that is not really targeted for traders but more for investors. people that are making their first steps in this space. And I think there's going to be a lot more, people or companies trying to do that and really create this easy-to-use experience.
So it would be, what you say is look for the experience of the user more as an investor and people, even these mass market people, into the game and not for the traders.
So there's no real difference today between the exchanges. Even the really good ones, at the end of the day, they look very similar to the smaller ones. There's going to be clear winners there. I think finance is definitely going to be one of them. Love what they're doing, but still on the other side of the spectrum, it can't just all be trading.
Dr. Gill.
On a wider scope, as an investor, I noticed that obviously we all know that when there's lack of perception of stability in currencies, gold goes up. That has been tradition. What I've seen lately, and I'd like to have your perception, is that actually for me, the cryptocurrencies seem to be taking over somehow. Some of that anxiety that is going into gold is going to cryptocurrency. But I don't see gold going up when there's some major financial problems, and I'd like to have your perspective on that.
So I ran a study on this because I wanted to really understand when Bitcoin will replace. I see Bitcoin as a digital store of value. I don't see it as a transactional currency at all. And I wanted to know at what point will Bitcoin replace gold as this thing. So I think, unfortunately, the Turkey crisis came too early in Bitcoin's life. I would have loved the Turkish crisis to have come 3 years from now, when many more people have wallets, when it's much, much, much easier to buy it, and where you can buy Bitcoin literally without even knowing that you're buying Bitcoin. So there isn't a real correlation between emerging market fluctuations, or dollar fluctuations for that matter, into Bitcoin. I ran models to actually see if there's no correlation, even on a very short time period. There was one little spike when the Turkish crisis happened. It was very, 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 very small, and it was primarily very small because the on-ramps and off-ramps in Turkey's got very stringent controls, and the on-ramps and off-ramps in Turkey are just too small. And so, yes, there were many articles that I think they said 15% of Turks own Bitcoin. I don't know if I believe that number. Specifically, when you look at the volumes on the exchanges in Turkey, it doesn't really make sense. I think we need to see a major currency emerging market crash, collapse 3 years from now. I think if that happens, it will be the biggest gift that we'll all get as Bitcoin holders, because I think really, I tweeted something the other day. I was meeting with an American fund manager, and he's got a massive portfolio, and he doesn't understand cryptocurrencies. And he, in this very condescending way, said to me, look, I don't really have time, but give me your 2-minute stick as to why I should be buying Bitcoin. I was like, you don't know anything, and you want me to give you the 2-minute stick about why I should be buying Bitcoin? Really, the only answer I had for him was very simple. I said to him, you have a $10 billion portfolio. How many assets in your $10 billion portfolio cannot be moved by any government decision anywhere in the world? And there was complete silence on the other end of the phone. It was like, and I think he then realized that every single asset in his portfolio is subject to some kind of political risk. And there's one asset that if he adds to his portfolio, he's completely hedged any type of political risk. And unfortunately, I think that that's only going to happen, like when he says, we've got the right custodian solutions, we have the right wallets, we have the right real on-ramps and off-ramps for institutional investors, and they really feel comfortable. I keep referring back to that pension fund manager example. For me, that's the ultimate litmus test. When the pension fund manager can stand up in front of his board and say, I did this, and put his hand on his heart and say he did the right thing, then we're ready for this meltdown, and then we'll get the thing for Bitcoin.
That equation, just to complete my question and see your point of view. Actually, what happens when there's instability or war? The dollar and the Swiss francs go up.
Yes, because people run to a safe haven.
Exactly.
But it's not a safe haven. It's like they say, it's like the term stable coin. But what is a stable coin? It's a coin that is most stable against the US dollar, which is anything but stable. But it's the best we have, so we kind of say, okay, well, it's stable towards the US dollar. I don't know if you've seen the US dollar graph against, for example, the euro, but it kind of does that. It's anything but stable. So I think that, again, maybe I'm idealistic, maybe I've drunk too much of the Kool-Aid, but I really think that the only stable coin in the world one day will be Bitcoin. Because for me, a stable coin is a coin that cannot be manipulated by any single government decision in the world ever. And really, I don't know any other asset in the world that has that characteristic. And that's why I think in future, when we talk about a stable coin, we should actually just talk about Bitcoin. So yeah, in the hype of last year, I invested in a few stable coins. I wish I could take my money back and just put it straight into Bitcoin.
To reach that point, you're missing something. You say the dollar, and we agree, but it moves within a range, and the euro as well.
Relative to what?
1 second. The dollar is backed up by the largest growing economy in the world, whether you like it or not. Now, the day that a Bitcoin will represent billions, or trillions rather, billions will not be enough. You need Bitcoins to be around probably over 10 trillions before it will be perceived as something that has some kind of substance behind. So I don't think it's going to be that soon.
So we can have this discussion for days, but I'll answer it for you very quickly.
We don't have days.
Yeah. I'll
We
try
have a
and
minute.
You got 2 minutes, like
I'll try and answer it for you very quickly. America, you say it's backed by the fastest growing economy in the world. Also with the debt number that even in their wildest dreams, they could never repay. The way I said, if you're investing in the US dollar, you're buying shares in a company which can never ever repay its debt. I don't know how comfortable that makes you. That's not where I'm going to put my money. Regarding the Bitcoin size of things, I agree. Bitcoin right now is too small. That's why I said I wish it was 3 years later. We need to get mass adoption. And mass adoption is not storing private keys, having a Trezor wallet, having a ledger. That's not mass adoption. Mass adoption is I go on my phone, I press buy, it's stored, it's saved. I go to the shop, I can transfer money. That's mass adoption for me. And when that happens, then I think the volatility will be a lot less and the value of Bitcoin will be a lot more.
Then you're confronting a key point. Just
I think, yeah, we can be here for 5
take it
minutes.
offline.
Yeah.
We have one more question, but before that, I really want to thank our panelists. Daniel, thank you very much for coming and for sharing what you do at Hexa at Orbs. We obviously, important to mention, have invested in Orbs and are very supportive of everything they're building. Asaph with Coinmama, which is also a portfolio company, and we're very happy to be supporting, another company that is really trying to bridge the gap and actually get us to the point where we do see mass adoption. Also market education and facilitation, which is also what we're trying to do in our way. And obviously the legendary Neu-Ner, who's been a really good friend and a partner, and we invest together a lot and hosts events in around the world. So thank you very much, everybody. And our final question.
Thanks for the privilege. A simple question on mass adoption. So it's a given that at some point consumer audience is going to come and start spending cryptocurrencies the way we spend fiat money now. That, as it was mentioned, like fiat money purchasing power is going down, while cryptocurrency purchasing power is expected to go up. So why would I ever want to spend my cryptocurrency and not fiat money? What's my incentive? How are you guys going to solve it?
It is a problem, and when the question was posed last year to one of the heads of the big banks, I can't remember who it was, she said the biggest problem that cryptocurrency actually has is why would I spend an appreciating asset? It's only going to appreciate for as long as we're on this mass adoption cycle. In other words, when we are trying to adopt it. That's the first, and then eventually it's going to reach some kind of stability where there's not this hunger and this FOMO to keep buying it. The second thing is, I don't know if there is a cryptocurrency out there today that I'm comfortable to spend as money.
Well, you just mentioned that you're going to spend Bitcoin.
Yeah, so when I say Bitcoin, I don't think it's going to be Bitcoin. Bitcoin for me, Bitcoin, the technology as we have it today, with 1 megabyte or 2 megabyte block sizes and 10 minutes apart, that for me is gold. As I said, digital store of value. I'm quite bullish on some other derivatives, and I'm bullish on a derivative of say, Bitcoin Cash. Maybe they'll get the payment thing right, maybe they won't. Right now, today, is there an actual coin that I'm comfortable to use for payments? Absolutely not.
No, I tend to agree.
All right. Well, you can
I
read
think
more
it's-
about. Oh, sorry.
I can just mention, I think it is a very interesting question. So right now, everybody here, our mindset, we think in US dollar. So, getting a crypto and then converting it in US dollar to pay for real goods in the real world doesn't really make too much sense. But I think the more that this ecosystem will evolve, the more there will be huge companies with huge economies trading with digital assets. There will be programmable ecosystem. Then the mindset won't be against the US dollar. It will just be ecosystem that trading digital assets against digital assets. So I don't think that mindset necessarily would be correct in the years to come. There will be digital economies, and then it's just the way we look at US dollar today.
Thank you very much, everybody.
Thank you.
You can read more about Coinmama and Orbs on our platform. It's so free to